Okay, good morning, everybody. I think we're going to start. It's 11:05. We don't want to start late. So thank you very much for everybody joining. Can I just hear with a thumbs up from the participants as well, if everybody can see and hear us? Just a few thumbs up, if possible. I can't see.
I think it's all good, Guillaume.
It's all good. Okay, good. Yeah, sorry, I can't see that. Okay, great. Okay, thank you very much for attending the Immigration and Residency in Mauritius webinar. On screen, you've got our three panelists. So let's start with today's webinar. First up will be Mr. Ian Chambers. Second up will be Mr. Philippe de Beer, and then last but not least will be Valérie from Lincoln from AfrAsia Bank. At the end, please just keep your messages or your questions until the end. We'll have ample time at the end to run through that. Just by way of a quick introduction, our panelists, Mr. Ian Chambers, he's very well known as the African Tax and Exchange Control Specialist. He's been in Mauritius, living in Mauritius since 2008. He's a chartered accountant, former partner from Fisher Hoffman Stride. He's one of the people that's got tax degrees and legal degrees, so he's very well suited for the advisory portion of this. He was also the head lead of structured and project finance at Credit Agricole. He was a partner at Rutledge's. So yeah, and he's currently chairperson of two companies and still doing his own consulting. Ian, very welcome.
Thank you, Guillaume.
Then second will be Mr. Philippe de Beer. He's the founder and CEO of ParkLane Properties, which is now a very well recognized independent real estate brokerage in Mauritius for over 20 years. He settled in Mauritius 34 years ago with his family as well. They're the proud parents of two children. And under Philippe's leadership, ParkLane has become one of the top 5 real estate brand brokerages on the island. So welcome, Philippe. We're looking forward to hear what you've got to say about establishing people yourself in Mauritius.
Delighted to be with you all. Thank you, Guillaume.
Yeah, and then the rose among the thorns, Valérie Lincoln. She was also born and raised in Mauritius, went for her studies to London. Back on the island, she went into the luxury real estate sales business and industry. And later on, she found a real passion and that's for wealth management and investment planning. When she joined about 9 years ago, she joined AfrAsia Private Bank. So we are certainly looking forward to hearing more from her regarding international banking and specifically AfrAsia's products as well. Welcome, Valérie.
Thank you for welcoming me. I'll look forward to talk to you later.
Great. Okay, myself, I'm Guillaume Oberholster. I'm a director at JurisTax in Mauritius. I'm resident in South Africa. I'm a chartered accountant by qualification, 36 years in public practice. Recently retired from public practice and now pursuing a new career as business consultant and business coach. So yeah, looking forward to facilitating this all for you. And yeah, so I think that's it from us, from the panel. Ian, over to you for the first part of the process.
Guillaume, thanks very much, and welcome to everyone. Thank you for joining us on this webinar. The aspects I'm going to discuss are a brief overview of the Mauritian income tax legislation, and then just dealing with the obtaining tax residency in Mauritius, and obviously to the tax implication arising on immigrating from South Africa to Mauritius. Have I got control? Move it. Move it. Okay. And that's the agenda. If you can move to the next slide, please, Kesavan. Next slide. Now, just briefly as an introduction to Mauritius on the financial aspects, highest gross domestic product per capita in Africa. We have no exchange controls in Mauritius. There are no death duties or estate duties or donations tax in Mauritius. The top tax rate in Mauritius for individuals is set at 20%, and that's while Mauritius has a residence-based taxation system. Your foreign investment income is not taxed if it's not remitted to Mauritius. In addition, any gains that you make on investments, whether in Mauritius or whether outside Mauritius, are not taxed in Mauritius, regardless whether remitted or not, on the basis that we don't have any capital gains tax in Mauritius. There has been an introduction of a 15% levy or surcharge for individuals, and that is levied on income in excess of 12 million rupees. And it is in place for a period of 3 years, and it gets remitted, and that's almost to balance the budget in Mauritius following the introduction of a new government in November when there were elections. Next page. Typically, the reason why I think many of you are on the webinar is to consider options of acquiring immovable property in Mauritius and residing in Mauritius. So typically what we need to look at is, because many of you would remain tax resident in South Africa, we wish to ensure that the income generated from the immovable property in South Africa is not subject to tax, or the immovable property in Mauritius is not subject to tax in Mauritius, or in South Africa, should I say, and also to ensure that in the event of your death, and I suppose there's nothing final but death and taxes, that the value of that property does not track capital gains tax in South Africa and estate duties in South Africa by virtue of the fact that South Africa has a residence-based base of taxation. So typically the type of structures that are utilized to hold immovable property in Mauritius is either a trust established in Mauritius, which in turn owns a movable company in Mauritius, holds a company in Mauritius, and the property is purchased in the name of the company. The effect of that is, because the shareholder of that company is not a South African tax resident, the application of the controlled foreign company rules don't apply to that property, because the shareholder or the majority of shareholder in that company is not a South African tax resident. Typically what would happen is that the South African tax residents will be beneficiaries of that trust, and there will be no tax implications until such time that the company makes a distribution to the trust, and more important, the trust then makes a distribution to the South African tax residents. But typically in these structures, they become holding structures, and there's no distribution out to South African tax residents. The immovable property either can be registered in something referred to as a société. A société in Mauritius is effectively a partnership. There are tax implications regarding the partnership. It's a tax transparent entity, although you can elect that the société is its own taxpayer, and hence the partnership rules that exist in terms of South African taxation legislation fall away. And typically the partners of that society would be the SA tax residents who would fund it, and a Mauritian trust in order to ensure that the asset remains at the estate of the South African tax residents. There have been numerous amendments to the South African legislation, mainly to do with ensuring that South African assets don't divest themselves of, South African tax residents don't divest themselves of assets and therefore minimize their estate duty. There have been numerous amendments to that over the years. The latest set of amendments, introduced good 10 years ago, provides that where a low interest loan or 0% interest loan is made to the trust, that resident who makes that loan is subject to income tax on a deemed basis, i.e. the interest is deemed to be provided, the loan is deemed to be provided at a minimum rate of interest, and that interest is then subject to tax in South Africa. In addition, the amount of the interest accrued on a year-to-year basis must be capitalized and added to the value of the loan, and that ensures that the accumulation of interest is also taken into account for estate duty purposes and income tax and capital gains tax purposes. But it is possible, however, to donate up to 100,000 Rand of that loan on an annual basis, free of donations tax, by virtue of the exemption that sits in the donations tax legislation in Section 56 of the South African Income Tax Act. There is a possibility to obtain debt funding from a financial institution in Mauritius, and Valérie will discuss that when she presents her portion of the webinar. And then also there have been recent amendments to the Mauritian legislation regarding the acquisition of immovable property. South Africa has transfer duty, which raises transfer duty at the top rate of 13% when immovable property is transferred between buyer and seller. The rate of land registration duties in Mauritius is set at 5%, but due to increase to 10% with effect from the 1st of July 2026. The budget, of course, is presented in Mauritius in June every year, and we may well see an amendment to that. During the budget presented in June this year, the registration duty, they also introduced a provision whereby the registration duties would be the higher of 10%, or effectively a 35% of the capital gains tax. But when the Finance Act was passed in August, the capital gains tax element was not introduced into the legislation.
Yeah.
Okay. Sorry, I'm just getting some assistance here. Can you just change there? Sorry, we're going to move on to the next slide. All right. Let's just look at a quick comparison between the South African and Mauritian tax bases. Both are residency-based, although what I would indicate from a Mauritian point of view, it's a modified residency basis, in that not all your foreign income is subject to tax in Mauritius, that I alluded to your foreign investment income. South Africa has relatively complex legislation as far as tax residency is concerned. If you're ordinarily resident in South Africa, you're tax resident in South Africa. Mauritius has a physical presence test, and year one is a minimum of 183 days physically present in Mauritius. Year two is 183 days physically present in Mauritius. And then from the third year, you can elect to use the 183-day test or 270 days in the current and the previous 2 tax years, provided you're at least physically present in Mauritius for at least 1 day in each of those tax years. Unlike South Africa, should you terminate your tax residence in Mauritius, there's no fiscal cost. In South Africa, if you do terminate your fiscal residence, you deem to dispose of your assets and immediately reacquire them. And the difference between the original cost and the market value of those assets at the time of emigration triggers is considered to be a capital gain in South Africa and taxed in South Africa. The countries have various anti-avoidance rules. South Africa has the controlled foreign company legislation, and that effectively provides that where South African tax residents either jointly or singularly own more than 50% equity in a foreign company, the income accrued to that foreign company is attributed to the shareholders in South Africa and taxed there without any dividend being declared. There are transfer pricing rules. Transfer pricing rules is very, very much on the radar of international tax and jurisdictions, and that needs to ensure that you document the relationships that you have between companies that are controlled by common individuals and companies that are common shareholding. There are attribution rules. I refer to that in the CFC rules, where income is attributed to the South African tax resident, and that may take place in the form of CFC rules, where donations are made by a South African resident to a non-resident. Any income earned in consequence of that donation is also attributed to the South African tax resident. And then Mauritius has none of the attribution rules in place. It certainly has the transfer pricing rules, and that really sort of tries to enforce the arm's length test to ensure that the transactions between parties are done at market value. Types of tax in South Africa, you got the normal tax, that's your income tax. You got dividends tax, that's withholding tax on dividends declared by companies to its shareholders. There's capital gains tax, which forms part of the Income Tax Act. You got estate duty, it's a tax that arises in the event of death, and donations tax, which effectively estate duty in advance, where residents transfer their wealth to other persons, in which case that triggers donations tax. From a Mauritian point of view, we have normal income tax. Our corporate rate is set at 15%. We have a climate corporate levy that is 2%, and that is only triggered for companies where the turnover exceeds 50 million rupees per annum, and that is about $1.2 million. You have a corporate social responsibility levy of 2%, only applicable on domestic companies and not on global business companies. There are social security contributions in respect of salaries paid to staff, and that's based, the total social security contribution is 9% of salary. But the other side of that is Mauritius grants an old age pension to its citizens and also to non-citizens, provided you've worked in Mauritius for a period of 15 years. The pensionable age has just been increased from 60 to 61 and increase into 65 over the next 5 years. Mauritius introduced a concept called the fair share contribution, which is also, again, assistance to balance the budget. It provides that for a 15% surcharge where the individual's income exceeds 12 million rupees, which is about $266,000. Is that correct? Yeah. And there'll be a 15% surcharge, and in that case, in determining the base on which it's taxed, the exempt domestic dividends are also taken into account. The surcharge is only there for a period of 3 years, terminates year-end in 30 June 2028. They've also introduced our alternative minimum tax, again, for companies, and it's beyond the scope of this webinar, so I won't discuss. And I really sort of, that's a sort of a summary of the taxation system in Mauritius, which I have discussed earlier, and that's just really a summary of it. So you can move on to the next page. Again, just comparing rates. South African corporate rate 27, Mauritius corporate rate 15. Wherever companies are involved in import-export business, i.e. acquiring goods outside Mauritius and disposing those goods to a country, to another country, and those goods are not landed in Mauritius, the tax rate applicable to that activity is 3%. South Africa has capital gains tax for companies fixed at 80% of the corporate tax rate. Mauritius no capital gains tax. South Africa has dividends tax of 20%. They are decreased to 5% in terms of various double taxation agreements. Mauritius doesn't tax doesn't tax the dividends, so therefore there's no withholding tax on declarations made by companies. And South Africa has the UIF system to fund unemployment. Mauritius has something called the Contribution Sociale Generalisme, which is based at 9%, 3%, 6%, 2/3 by the employer and 1/3 by the employee. And it also has a compulsory gratuity fund, which is payable upon retirement, and the employer contributes to that at 4.5% of the salary of the employee. From an individual point of view, top tax rates in SA are progressive, 0 to 45%. As I mentioned, for individuals in Mauritius, the top tax rate is 20%. Capital gains tax 18% for individuals in South Africa. No capital gains tax in Mauritius. Estate duty 20% up to 30 million, 25% above 30 million in South Africa. There's no cost of death in financial cost of death in Mauritius. No donations tax in Mauritius. As I mentioned, domestic dividends are exempt from tax, but subject to the fair share contribution discussed earlier for a period of 3 years. And I also mentioned that foreign investment income is not taxed in Mauritius. And also the income that you earn from a bank deposit in Mauritius is also not taxable in Mauritius at all. I mentioned the portable retirement gratuity fund. Then from a trust point of view, the tax rate for a trust in South Africa is 45%, and the capital gains tax rate for a trust is 36%. In Mauritius, your rate of tax for trust is 15%. However, if the trust is a non-resident trust, meaning that one of the options is that the majority of the beneficiaries are not resident in Mauritius, then it's considered as a non-resident trust, in which case only the rental income earned by that trust will be subject to tax in Mauritius, and domestic investment income being interest. Obviously, capital gains not taxable. Next page, please. Then I basically spoke about tax immigration in South Africa. Obviously, with a lot of individuals seeking to leave leave South Africa and becoming tax resident in Mauritius, you need to go through a process with the South African Revenue Service. You first need to prove that you are no longer ordinarily resident in South Africa, and you need to demonstrate steps of having taken the necessary steps to achieve this objective. The South African Revenue Service will request either a copy of a passport, foreign passport indicating your ability to reside in a foreign country, or in the case of Mauritius, the issue of a occupation permit, work permit, or a permanent resident permit issued by the Mauritian Economic Development Board, demonstrating your ability to reside in Mauritius. You need to be absent from South Africa for at least, or not present in South Africa for more than 91 days in the year in which you emigrate. The tax year ends on the day that you emigrate, so timing is essential. Otherwise, it delays your actual tax emigration date to the end of February in the year in which you emigrate, and you only become tax resident from the following year. And then, obviously, if you're in South Africa by virtue of something called the physical presence test, i.e., not ordinary resident, but you have been in South Africa continuously for a period of 5 years, and been in South Africa for at least 91 days in each of those 5 years, and in aggregate a total of 915 days in South Africa, you then become tax resident in South Africa from the beginning of the 6th year. If however you are tax resident in South Africa by virtue of the physical presence test, if you are absent from South Africa for a consecutive period of 330 days, then your tax residence terminates. Next page. As I mentioned, the tax residency or termination of tax residency does trigger a tax liability in South Africa, colloquially known as exit tax, and that's really calculated by being the difference between the market value of your assets at the time of immigration and the cost of those assets. Upon immigrating from South Africa, you will only be subject to tax from your tax in South Africa on your income earned from a South African source, and that typically would be pension fund income, because the source of that income is the services that you rendered in South Africa, and possibly interest income. Although if you are a resident in Mauritius or absent from South Africa for more than 183 days during a tax year, the interest that you earn from a South African bank is exempt, or South African interest is exempt from tax. In determining, obviously, whether it is worthwhile emigrating from a South African point of view, the calculation needs to be done. One of the advantages I have of emigrating from South Africa and triggering the capital gains tax liability is that you avoid a state duty in South Africa in toto, and effectively, or in the case of death in South Africa, you deem to have disposed of your assets and immediately or transferred your assets that you have to your estate, and that triggers a capital gains tax liability. So capital gains tax is going to happen in South Africa, whether on the earliest of immigration or death. And then finally, just SARS will issue a tax clearance certificate to you upon successfully completing the immigration process. That will have a PIN attached to it, and you can utilize that PIN in order to transfer the funds that you have in South African banks outside South Africa. I'm going to just quickly look in on the relocation services offering by JurisTax. Obviously, emigrating from one jurisdiction to another jurisdiction, you need things set up in the new jurisdiction. JurisTax is able to assist with the obtaining of your permits, and the permits extend to spouses and children. Obtaining temporary accommodation in Mauritius, leasing accommodation in Mauritius, liaising with the estate agents, your likes of ParkLane, meeting and greeting your arrival in Mauritius, and assisting on moving you to your new premises, and also assistance on relocating pets from South Africa to Mauritius. Because there is rabies in South Africa, when the pets do arrive here, there is a quarantine period up to 90 days. Then obviously, if you wish to acquire immovable property, JurisTax will assist with that. But again, Philippe is a past master on that. And in fact, having said that, Philippe assisted me with my relocation to Mauritius when I moved here in 2008. Very good, and even hired temporary accommodation for me because the property I was going to move to wasn't yet completed. And then obviously assistance with opening bank accounts, internet banking facilities, SIM cards, telephonic application for your tax reference number, insurance, school admission for children. I know Valérie is going to discuss the opening of bank accounts. I think with that, I'm going to move on. Guillaume, over to you.
Oh, thank you, Ian. Just a comment. If anybody who's got a question, please pop that into the chat, and we'll give a chance after all three presentations for questions, and I'll then divert the questions to whoever of the panelists should be answering them. So just if there's any questions, please hold them until the end or pop them into the chat so long. Thank you very much.
Guillaume, if I can maybe mention, I think all the participants welcome to put them in the chat box, and to the extent we can answer them, while the presentation while the webinar is taking place, and if not, then we can address the unanswered ones later.
Yeah. Or if there's some clarification needed, we can just handle that. Yeah, no, great. Thank you very much, Ian. Okay, then Philippe, over to you for the next part of the webinar.
Thank you so much, Guillaume, and thank you, Ian, for this valuable information on taxation and tax immigration. So important. So I'm delighted to take you through this presentation where we'll explore the many reasons why Mauritius is such an attractive destination to invest in property, to relocate, to retire. So whether you're looking for lifestyle opportunity or long-term security, really Mauritius offers it all. We've experienced it, and it's the truth. So we've limited time today, so let's fasten your seatbelts, and then I will brush you quickly on the various points that are important to highlight today, and especially why Mauritius is such an ideal location to work remotely, to live with your families, to invest in a secure and thriving economy, or just to retire in peace and comfort. It's really a wonderful destination that fits different life stages and aspiration, and I will take you through those few points. A few facts and figures. Mauritius has a population of 1.3 million approximately, so English is the official written language, but French is more widely spoken in everyday life, but most of the population is really fluent in English. So don't worry, we enjoy also vibrant cosmopolitan culture. We've got 2 main seasons. Our summer runs from approximately November to April, and our very mild winter with temperatures who are between 20-25 degrees. So that's, I think, very mild winter, with nights rarely dropping below the 16 and 18 degrees. So this extends from May to October. In terms of the island attractiveness, obviously we find here very high quality of life. From its climate that I just mentioned and the natural beauty, to a lot of activity that you can find on the island. Very importantly, it's a very safe country. It's ideal for families. The education and healthcare are really of international standard and improving year by year. For those who enjoy fine dining and culture richness, Mauritius is really a great place. It offers a diverse and colorful blend of influences from Europe, from Africa, and from Asia, and it really has developed its own cuisine, which is very tasty. So for living in Mauritius really means access to a luxury lifestyle that you'll find in fine hotels and restaurants and spas and a variety of entertainment options. These really all contribute to a high living standards and really help in the attractiveness of the country. I must say that the local and expatriate community really blend well with each other. It's very easy to integrate. I think Ian has experienced it, and I did too. Obviously, marrying a Mauritian helps a lot, but we're not calling you to change spouse on the country. It's to really enjoy the country with your spouse. So geographically, we ideally located, I must say, when you see a little bit what's happening around the globe. We found out that really we are strategically located, really between Europe, Africa, and Asia, in a very safe place, safe region, and also in a convenient time zone. Only 2 hours difference with South Africa, and only 2 to 3 hours with Europe, which really keeps it very easy to stay in touch with the family. We've got daily flights, obviously, to South Africa. We've got at least 3 flights to Cape Town, and direct flights to Cape Town from SAA, soon to resume, I think, from December. So yeah, before we dive into the adventure side of Mauritius, there's just a few pictures of my last weekend with the family. So you'll notice that we really enjoy the life here, the beaches, the great food, the outdoor fun. And on the bottom right, you see Ian on his kitesurf. Wonderful, Ian. You do that so well. Yeah, if you love the outdoors, Mauritius is really a paradise. Whether you enjoy hiking or diving or kite surfing, even skydiving, or even helicopter tours, sorry, there's always an adventure waiting on land, in the water, or in the air, as you can see here. It's a great place to enjoy nature. Business-wise, it really is a thriving place. It comes to really stands out in the region. This country enjoys long-standing political and economic stability. We've seen it. We enjoy, and Ian has brushed over it, a very favorable tax regime. It's also ranked #1 for many years, #1 in Africa for ease of doing business. Of course, there's always room for improvement, like in any country. But I think overall, we really have great facilitation to investment. So it's clearly a pro-foreign investment country with a strong legal framework that really protects the property rights, but also facilitates smooth business operations. It has a very robust and well-regulated financial sector. And the country is increasingly positioned as an innovation hub. It really wants to attract more of investors in fintech, in ICT, in renewable energy. Add to that a skilled bilingual workforce. So you really have every supportive ecosystem for investment in the country. All right, on the infrastructure side, sorry, we also, and I think I just mentioned it previously, really modern transport systems, which is very important for all of us. We've got reliable motorways, high-speed internet, and all that supports really both the business and the lifestyle needs of investors. Okay. Why do people choose to invest in property in Mauritius? Firstly, one of the main points is really a destination of choice for investors that look to diversify their property portfolio. And the fact that the market is very stable, is very well regulated, has offered, and is one of the main reasons why it attracts foreigners. It offers really solid legal protection. So you've got all the essential pillars for long-term growth and security of your assets here. Secondly, with the right investment and management structure, your property here can really generate attractive rental returns. In terms of rates, I would say that long-term rentals typically range between 2 to 4%. While short-term holiday lets can easily generate 5 to 10%, sometimes even more if it's really well managed and in a strong high-demand location. Of course, one of the main reasons investors choose Mauritius is the opportunity to obtain permanent residency. So when you invest in a property above $375,000, it allows you and your family to qualify for this, adding even more long-term value to your acquisition. And finally, investors are also drawn by capital appreciation over time. So thanks to increasing demand and limited high-quality supply in key areas, it really helps to appreciate the wealth and the value of your property investment. On the tax side, yeah, Ian, you touched on it earlier. I won't go over it, but obviously the main benefits here to invest in property is that you don't have wealth tax, you don't have inheritance tax, you don't have property tax, you don't have capital gains tax. So I think these are the main reasons why people choose to invest in property in Mauritius. Financing is available. We have Valérie from AfrAsia Bank with us, so she will speak more on the subject, but just so you know that both local and international financing solutions really exist to support your investment. And finally, beyond all the numbers, what really attracts buyers is the lifestyle. the year-round sunshine, the great connectivity, and the quality of the healthcare, which becomes increasingly important, especially when seniors come to the island. We've got top schools, English, French, and most importantly, we really have a strong sense of safety and peace of mind, which I think has got no price nowadays. So it's just not the financial investment, it's really a lifestyle upgrade that you can have in Mauritius. I don't think I need to add anything else, but I still will do because we've got a few things to cover. But I think with these reasons, you should be convinced by now that Mauritius is the first choice. So how to invest in property, I think you need to know that. Let me quickly explain how foreigners can buy in property in Mauritius, because they can't just buy locally anything that Mauritians could buy. So first, non-citizens can only buy property which are in dedicated property schemes. So from 2002 onwards, the authorities introduced a number of dedicated property schemes. And they were named 3 different names, and under which private developers have created private developments open to foreigners. It started with the large golf estates in 2002 and even residential marina then. So these were called IRS, Integrated Resort Schemes. Then came the RES, real estate schemes, which were smaller in scale. Both were later regrouped under what we now call the PDS, the Property Development Scheme. All these are essentially, just for you to know, gated residential resorts, luxury resorts, accessible to both foreigners and Mauritians. And by the way, year after year, about 20% of Mauritians invest in these high-end residential schemes. So that shows that they see the value and the lifestyle amenities and the offer that can be found in these. In 2016, a major change allowed also foreigners to purchase apartments outside of these schemes, anywhere on the island, provided that the apartments are in a building with a minimum of ground plus 2 levels. That's why you've seen those rules here and there called ground plus 2 apartments. Basically, it can be more than ground plus 2, but you can buy anywhere in the building, not just on the ground floor, not just on the second floor, like some people think. And the purchase price has got to be above 6 million rupees, which is roughly 2.3 million rand. We also saw the emergence of smart cities, which basically are large-scale urban developments that integrate residential units with recreational, medical, commercial, educational facilities, plus a full set of infrastructures around. From time to time, we also have IHS opportunities, which is Invest Hotel Scheme opportunities. These are basically just hotel residences where the hotel sells a room or suite to raise capital. So you can buy the unit and lease it back to the hotel. That is a requirement, and you benefit from a few weeks' use per year along with attractive rental returns. Now, in all these schemes, IRS, RES, PDS, Smart Cities, Ground Plus 2, and IHS, the permanent residency is granted for any acquisition above $375,000. I just want to make a note that it's important that it doesn't offer citizenship, okay? It offers permanent residency. And also you cannot combine 2 properties to reach that threshold. It must be a single purchase. Obviously you can buy several ones, but you can't combine them to reach $375,000. However, fractional ownership is possible. So if you're buying together with a partner, and if you're both investing $375,000 in one property of that value, you will qualify for residency. Or if you don't invest as much as $375,000 in one property, then you will have to choose whoever of the 2 partners will have residency. Sometimes one of the 2 doesn't need residency. All right, so now in terms of acquisition costs, which are payable, so you have the time of signing the title deed before the notary. Everything happens here in front of a notary, public notary. So these costs range between just over 6% and approximately 8.45%. Why these little changes here and there? Because it depends if you're using the services of an agency. But I'll give you a little hint on this one. So you pay 5% registration duties. It's also paid by the seller, 5% by the seller. It's paid to the government at the time of the signature of the title deed. This will increase to 10% on each side from the 1st July 2026. All right. Notary fees, they're calculating on a sliding scale. So it's typically between 0.6 and 1.15%. Agency fees, both are paid by the buyer and the seller, each paying 2.3%. So it's basically 2% plus VAT on the 2%. However, what you must know is that when you buy off plan, in most cases, the agency fees are already included in the price. So that really makes the great opportunity to work with an experienced and reputable real estate agency at no extra cost, finally, that will help you to receive objective and professional advice, which is really tailored to your needs. On resales, obviously, we charge 2.3% on each side. All right, residency opportunities. You still have some residency opportunities beside the investment in a property, and I just mentioned it here. So there's the residency by investments with the two cases that you can see. Either you invest in a business for at least $50,000 or in a property. And then you've got different types of occupational permits. Basically, you don't need to buy property. In those cases, you're either a professional, you're employed by a local company, or you come as a self-employed, which is basically a one-person company which offers services and consultancy. You still have the premium visa, which is basically a one-year renewable visa, ideally for people that work here remotely and still generate money from outside. And then you've got the famous and well-known and well-used retirement visa, where retirees, you just need to be over 50. So I think we don't all qualify here. Valérie doesn't, but if you're over 50, you qualify for it. You just have to bring in the country at least $24,000 annually. I just want to brush over the property market. So you've got a bit of figures. Since 2005, which is when the first units were actually signed, we've seen just over 6,200 properties exchanged to foreigners. That represented about $4.6 billion. Over 75 nationalities have bought. So really that shows the attractiveness from all over the world. 2024, you see the figures here, and the first semester of 2025, we've seen an increase of about 21% in sales volumes, and we've sold in the country, not just us, ParkLane, but in the country, we sold about 420 units so far. You see the nationalities in the last 12 months. You see that France keeps the first place. Then various nationalities, but South Africa is the second biggest foreign nationality buying in Mauritius. I mentioned Mauritians, 20%, and you see all the nationalities here. I just gave you also a little median price, which is basically the price in the middle, not the average, but in the middle between the highest and the lowest. And you see the apartments in the first semester were exchanged at a median price of $470,000. You see here the price per square meter, and for villas, you see here just under $1 million. All right, I'm going to brush you very quickly over some examples of properties because time is running. But I wanted to give you an idea of what type of properties you can get according to your criteria. And usually we see the following criteria. First, people are often looking for an easy lock up and go. They want to have access to facilities around. They want a rental return when they don't use the property, and they really want it to be a good investment opportunity. So for this, we've got really, it's diverse, but I'll give you a few ideas. We've got a Northeast, great little projects sold off plan at the moment. And you see here an idea of 1 bedroom, 2 bedrooms, and 3 bedroom. And you see here the prices. It's all in a very nice seaside integrated resort in a vibrant community with a little 9-hole golf course has been awarded, and a nice little school. It's a nice coastal resort. Also north in a great smart city. On a main boulevard in Montchoisy, Grand Bay, you see the Signature, which will have shops at the bottom and then great apartments, different phases. So please reach out to us because there's always new phases being added. But at the moment, you see a little bit these price points here: 2 beds, 3 beds, and you see a little bit of an idea in the phase 1B of the type of rental returns. Long-term LT 6%, still very good, and short-term you can expect even 7%. Another one more here in the west, where we've got our main office here. So on the west, in Tamarin Smart City, you've got in this project, the 2 beds are still available, and they come all furnished for $375,000, and it will be offered with a rental management by a specialized company. And we can expect around 7%. Obviously, nothing is guaranteed. We're just giving assumptions to compare to what is happening around the island at the moment. If you're looking for larger homes, not big homes, but let's say larger homes or townhouses, still close to schools, you've got your family, you've got your kids, and you want to be close to sport facilities and leisure, we can offer, for example, in the west, the Grove, great development by one of the main developers in the west. And the 4 beds have been sold out, but the 3 beds townhouses are sold for just under $420,000. It's really a great place with a lot of amenities around. Las Palmas, great little development if you're looking for a home, a villa, and not an apartment or not a townhouse. You want your pool, you want your garden, and I think this one is a great choice. You've got the 3 beds and the 4 beds. You see the prices here. You see the expected monthly rental return, mostly on the long-term rental return side. You see the dimensions of the plots. Great option that really is very interesting here in the west. Villa Mauritius in the north, 16 villas, $740,000. Great option as well if you want to be in the north, like some people choose to. Now, if you're looking for larger homes, really you're looking for lifestyle, you're looking for space, you're looking for, and still you want to be close to, where the life is. You don't want to be too far from everything, or you're just looking for luxury and something really high end. There are many options. I'm just giving you a few. Palmaris, off-plan developments with prices really reasonable. 3 or 4 bedrooms. You see the plots areas, and you see the prices here just around $1 million. Sorry, I've got to brush a little quickly, but you can easily contact us after. Eco Savannah, great project already with a lot of construction going about. You've got the Showcase Villa, which is already finished, and all the others are going forth. So a lot of progress on the project, with prices ranging from 1.1 to 2.8 for very large villas. There's going to be a restaurant, a lounge bar, a superb 120 square meter pool and fitness club. So it really adds a lot, and they will offer a great rental return management, and they're very good at that. Then you've got Harmony Golf and Beach Estate, one of the new golf estates in the west by a very reputable 5-star luxury hotels chain. And on a 150 hectares golf estate, you will have your own villa. Prices are a little bit more on the high side, but great development, wonderful estate. Between $2.2 and $3 million, you will get your nice 3-bedroom villa. Obviously, it can be customable. You can also buy a plot and then choose to develop your own villa on it with cahier des charges, with the building restrictions. Is the master plan. All right, so great in the west. Lagoon Villa in the west, in the north, Montchoisy, a wonderful series of 7 lagoon villas between $1.8 and $1.9. Space, luxury, an amazing resort with an 18-hole golf course where, in fact, AfrAsia Bank holds every 2 years an international championship that you can watch on SuperSport. Then that's the bourgeoisie, and you can see here on the screen that little lagoon villas. Then you've got one and only. I mean, that's the ultimate luxury. You're part of the one and only brand. 52 luxury hotel villas. You get into the rental management of the hotel. Prices are reflected. I mean, you're nearly on the beach, freehold, between 4.3 and 7.6. It's just beautiful. It's very high end, but beautiful with the brand. Obviously, these are branded residences. So there you are. I really want to give you a little idea of what you can get on the island. Obviously, there's a lot of resales that we can give you access to. So I hope that helps you to have a real grasp of what we offer in Mauritius, and I can't wait to welcome you and help you in your search. Over to you, Guillaume.
Oh, thank you, Philippe. I think that was very interesting and very informative. If you're paying with South African rands, also quite disturbing. No, I'm just saying that tongue in the cheek. Yeah, no, thanks a lot. That was really great to see everything that Mauritius has to offer. For those of you that haven't been to Mauritius just for a holiday, do yourself a favor and do that. You will want to go back and back and back again. Okay, great. Valérie, next, let's give us some info on the banking environment and all the banking services that's on offer on the island. Thank you.
Hi, everybody. So I'm very happy to be here with you today. So very quickly, I'll give you a very quick overview about AfrAsia and who we are. So basically, AfrAsia has been was open in Mauritius 18 years ago. It can seem quite young, but we are already the third largest bank on the island, and we are very proud of that. These few numbers here might give you an idea of the Mauritian banking services globally anyway, because you can see that we bank people from more than 170 different countries. So this really shows that Mauritius today is very popular, and it's getting more and more popular. I won't go too much onto our side, of course, because what really is of interest is what we can do for you relocating into Mauritius or buying property into Mauritius. So first of all, one of the questions that we get very often is how easy is it to open an account in Mauritius and to bank in Mauritius? So basically, in almost all banks, and with us, obviously, it's quite easy to do. Of course, it's always a plus to be in person at the bank, to call in at the bank, to fill in forms and all, but a lot of things can be done via a Zoom meeting, a Teams meeting, to ease the process. So basically, almost anybody can open a bank account in Mauritius. You can be a foreigner resident in Mauritius or foreigner non-resident in Mauritius. It's, as I said, it's quite easy. You can open an account for you personally, but of course you can also open accounts for any of your structures that you've been put together in Mauritius for it can be for your business, but also for your relocating plans. So like Société that Ian quickly went on earlier, but we can open accounts for all of these different things. So basically, if I had to give a little timeline on an individual point of view, we get in touch today, you fill in all the forms, we get all the normal KYC documents that can be asked, which is quite basic everywhere in the world, passport, proof of address, a little brief on yourself and your background, your career, and a bank reference letter. If we have all of these documents, an account can be opened within 5 days. It can go up to 2 weeks, depending on if your file is a little bit more complex, but it's quite fast. And once it is open, you can transfer your funds from overseas into your account. And what is also good to know is that most of the time for this type of client, I would say, you would tend to get a dedicated private banker, okay, who can be always the same person you talk to on the phone, of course, reachable by WhatsApp and all other different types of communication tools. You can open accounts in, obviously, Mauritian rupees, but also in a lot of different currencies. USD, Euro, also the Rand. So we have a lot of clients that do have Rand accounts. So this is also possible. Of course, we will offer you anything that a normal bank will offer, cards, internet banking. We are also working on a mobile app, which will be coming very soon. And you have access to all of that. And again, from your country, it's easy, no problem at all. Other things that are offered, proposed, especially at AfrAsia, and there is a growing demand for that, is the wealth management part and the custody services. So you are able to open a global custody account with us, and to it you can transfer an existing investment portfolio that can be sitting anywhere else in the world. You're relocating to Mauritius. It makes sense that everything is sitting into Mauritius. This portfolio can be relocated. So basically, just the address of a portfolio changing. That's number one, if you're already quite familiar with investment and all. But if not, you have some funds lying around and you want to, after you've maybe invested into property, you want to do some more things about the funds, we can also open, as I said, a custody account and create for you an investment portfolio. We will sit down with you, understand what are your needs, what is your risk profile, and then we will create something with you for you to get the best return or more income, depending, as I said, of anything that might be needed. So again, all of these things that I'm talking about, I tend to go straight to the frequently asked questions that we get from people investing into Mauritius. So one, of course, especially for this webinar, it's for property financing services. Almost any bank in Mauritius will be able to provide you with bank financing to buy a property. Okay, there's a lot of different options that are available. So this presentation could go on for many hours, but of course we will not do that. So you can contact me afterwards, but I'll give you a few tips to start with. So something really important to note, that's really important, the Economic Development Board, which is the EDB, that some of you might already know of. It's basically the government office, I would say, who takes care of giving you an approval to buy property in Mauritius or not, if you're a foreigner. So they have added some regulations recently. So that was back in December 2024. So basically, if you're buying a property which is new into some of the specific developments like the IRS, PDS, IHS, Smart City scheme that Philippe went on through earlier, you have, and I'm talking about new properties, okay, so directly from the developer. As a foreigner, you have to bring into Mauritius a minimum of $750,000 or equivalent in another hard currency before being able to ask for a local bank to finance the property for you. I hope this was clear. I'm just going to give one example. Let's say you're going to buy a property which is worth $400,000 because you want residency. If it's less than $750,000, basically you will have to pay cash for that property. If it's a new property, as I said, past the $750,000, you are able to take a bank loan locally for the amount above the $750,000. This might seem a little bit negative, but don't worry, Philippe will show you there are more options, such as, for instance, this rule doesn't apply to any resale, doesn't apply to any Grant Plus 2 scheme as well. So there are options, don't worry. So I'll go into the loan. So let's say you're able to get a loan today. I think it's important to mention the LTV, so the loan to value. Again, this would probably be on a case-to-case basis, but most of the time, if we go for a classic mortgage loan, a bank will be able or will be keen to finance you for up to 70% of a property price. Okay. Now these loans, of course, we are able to give out loans in Mauritian rupees, but we are also able to give loans in euros, USD, pound sterling, and maybe other currencies. This will really be on a case-to-case basis again. It would have to make some financial sense to go for USD, for instance, and not to Mauritian rupee. Again, this can be discussed afterwards. We do have a lot of different structures, as I mentioned earlier, for the loans. As I mentioned, of course, we have the classic mortgage loan that you would get anywhere. We take the property that we are financing as the main security, and we finance part of it for you, and you put in a part of equity as well. That's very classic. But we also have other things that can be done. For instance, I'm just throwing a few options here. We were mentioning the portfolio and investment portfolio earlier. If you have an investment portfolio that is nicely performing, but you don't want to cash out from to be able to buy your property, this portfolio can be transferred into Mauritius, as I was mentioning, and the bank can take a pledge on that portfolio and give you really some cash from that portfolio to finance you on the property. Of course, here again, the LTV would be on a case-to-case basis, but most of the time on the portfolio amount, on the portfolio value, it will be an LTV going between 50% up to 70%. That would really depend on what is inside that portfolio. And also something that has become more and more popular, I have to say in the last year or so, is that we take the portfolio I was mentioning, plus we add the property as well. So we have both securities, so we can release more funds and the financing amount becomes much more interesting. And some of our clients have been able to finance, well, we have been able to finance up to 100% of that acquisition through that structure. So here, what is interesting really in that last option is that the capital repayment can be flexible. You don't have to amortize on a monthly basis where you pay part of the capital, and we can sit down and see what's working best for you. Let's say you normally derive dividends from your company on a yearly basis, so capital payments can be done at that time when you get your dividends. So it's quite flexible. Again, everything can be done on a case-to-case basis. The real idea is to sit down with the bank and understand where you're going and what would really work for you. And lastly, if there are some people amongst the participants today that already hold property in Mauritius, we are also able, again, on a case-to-case basis, to refinance some of your properties and to release cash from past investment into property towards a new one. So I'm just going very quickly on that. I think we have gone over that already. Banks in Mauritius, what is good to know, there might be a perception sometimes about Mauritius. We are a small island, people just go to the beach there and all, but we really are a financial hub today in the Indian Ocean. And as Philippe was showing with a few numbers and percentages, we have people relocating to Mauritius from a lot of different countries, Europe, even the US, and of course South Africa. So really from everywhere. This really shows that there is trust into Mauritius and the way we're growing, and the banks are doing the same. So we are offering today almost anything you could find from a well-established bank in Europe, wealth management, corporate banking, global business banking as well. You can open your offshore accounts with banks in Mauritius, of course, private banking, and the treasury departments as well. So I think I went over very quickly on the FAQs, but of course, there's so many things that can be discussed, but feel free to be in touch afterwards. Guillaume, I'll pass it on back to you.
Oh, thank you, Valérie. That was quick, and maybe we can give some people some discount on time today. Thank you very much. Just as a bit of a summary, there will now be time for questions. I haven't seen any questions in the chat boxes yet. Kesavan, maybe you can just double check for me. Any questions to any of the panelists? Please feel free to ask those questions now. They are quite willing and able to answer all your questions.
Yeah, I'm not seeing any coming through, Guillaume.
Yeah, maybe I'm going to just ask a question to each of the panelists. And Ian, maybe we keep the order for yourself, Philippe, and Valérie. But it's the same question that I'm asking for everybody is, according to your knowledge and experience, what is the biggest misconception regarding, in your case, Ian, international tax or taxation in Mauritius? Philippe, maybe owning property in Mauritius or even international property, or then Valérie, international banking services. What in your knowledge or experience are the biggest misconception? Because people talk around fireplaces easily about those. So if you can maybe just give us a brief answer of your view on that. Ian?
Yeah, thanks, Guillaume. Yeah, I think the concept of international tax is probably a bit of a misnomer, because really no one tax law exists that is applicable to all jurisdictions. And obviously, the reason for this is no supranational taxing power exists, and the right to tax its citizens really falls on the state. Obviously, we've seen the introduction of the common reporting standard for the exchange of information between jurisdictions. But just, talking about international tax, the tax laws of various countries may be similar in many respects, but they're also different in many aspects as well. And these differences lead to, call it double taxation, certain instances non-taxation, or in fact double non-taxation. So it's really understanding the interaction between the various jurisdictions' tax laws as to what is taxable, when it is taxable, or whether it is indeed taxable at all. And I suppose that's the space that I play in. So I would imagine that the concept of international tax essentially refers to the international aspects of the various domestic aspects of legislation. So, yeah, I think that's really the what I will say is that I think essentially international tax is a study of how different tax systems interact when cross-border events occur. And I think that's the only way I can actually answer that question.
Oh, thanks. I think that clarifies it quite a lot, because I mean, I've certainly encountered it as well, is that people use the word international tax, but actually there are actually no international tax. It's just the interaction of double taxation agreements, countries' tax systems, etc. Thanks for clarifying that, and I think that's a great answer just to clarify a possible misconception in people's minds of like this mystic thing called international tax.
Or even the mystic thing called
Philippe,
tax.
over to you. Yeah.
Yeah.
Philippe.
So, look, I think in the matter of property, the key is to be really well accompanied from the start, because, as you said, there's a lot of misconceptions. I've mentioned a few. The first one that often I'm confronted to is that people think that when after buying one of the qualified resorts, they can then buy anything they want on the local market, which is really not the case. It's always restricted to these schemes and these developments which are accessible to foreigners. And another misconception, and I mentioned it, is in the ground plus 2 apartments. they think that they can only buy on the second floor or sometimes on the ground floor. I don't know where this comes from, but anyway, you can buy anywhere you want in the building. Then another misconception or maybe assumption is that, you know, I want to buy on the beach because that's why I'm coming to Mauritius. I want to buy on the beach for next to nothing. So because most of the beachfront coastline is leasehold, it's restricted. Originally, foreigners could not buy on leasehold land. There's been a few derogation for special developments, mainly ground plus 2 developments, accessible to foreigners in some instances. But broadly, it's only you can only buy on freehold land. And then, obviously, when you've got coastal properties, coastal large development, which have got part of their development on the coast, they usually create a beach. Or they have a wonderful beach and then they create amenities around it. So obviously all the properties around in the resort increase in value because you've got access to a beach and access to all the facilities near the beach. So I would say these are little misconceptions, and you just need to be informed the right way by professionals. There's a lot of people giving a lot of information, sometimes taxi drivers, they're very willing, they're fantastic, they're great, but they don't have the right information. They just hand over wrong information and people are really totally misled. So always go to a professional first to really know how you can buy property in Mauritius.
Great. Also very informative. And I think that's also really answered the misconceptions that's certainly running around in people's minds from time to time. Valérie, from your side, any misconceptions that people have about international banking and banking services?
I would say that, well, first of all, I think it's been around for maybe 20 years now or more, that Mauritius is very often tagged as being a tax haven. So with that tag, often people think that maybe it's not 100% safe, or when you send your funds to Mauritius, no one is tracking it and all. But I want to make sure that people know that Mauritius is a very stable, and we are compliant with all the international standards when it comes to money laundering, KYC compliance and all. I think it's really, really important because in a way it creates more trust into sending money to Mauritius and investing into Mauritius. I think that's really important. And I get that quite often, but maybe sometimes we ask questions that are fair, but they think maybe in Europe you would ask that question, and why are you asking this if you're sitting in Mauritius? But because we are more and more attracting people from all around the world, so we really have to remain compliant and, as I said, highly regulated finally. And also, I think something quite important, a lot of people think that they would open accounts in Mauritius only if they are planning to come and live in Mauritius. That should not be limited to this. A lot of people, maybe younger, started working, are earning some good money, and they want to start investing. You don't have to only invest in the country where you are living. You can start investing anywhere in the world, and Mauritius, as well, we all went through all of this today, is a good start, especially from South Africa, because Mauritius tends to be a good plan B when time passes by. So it's very easy to open your account remotely, a non-resident account, and send funds regularly or less regularly to Mauritius to start building, as I said earlier, a portfolio, or to start building a cash reserve into Mauritius for whenever you're ready to invest into something bigger. And most of the banks in Mauritius can make sure that your money is not just sitting around doing nothing. So we will be here to make sure that it brings along some growth or some revenue for you as well. So I think it's always a good thing to think about, why not open an account right away, and we'll see afterwards what happens.
Okay, thanks for that as well. I think what's clear from all three of the answers is that it's important whenever you contemplate looking towards either emigrating or doing international business or buying international property or investing internationally, you need to speak to the right people. You need to speak to professional people. You need to make sure that you actually spend time finding out who can really deal with that, because it is not as difficult as people think. But because of international compliance as well, it's all over the world. It's not only in South Africa or in Mauritius or wherever the case may be. It's very important that one knows and get to know exactly what needs to happen. Whether it's a bank account, whether it's a property, whether it's a tax structure, or whether it's a business structure, and what's the effect on that would be. Let me just see if there's any questions.
There was one which I have answered, Guillaume.
Okay, good. Thanks, Ian. I think what I'm going to do is let's close off this. Before I say goodbye, let's just close off, and I'm going to ask each of the panelists. They've each lived in Mauritius for, a long time. I'm going to ask each one of you, and I'm going to start with you, Valérie, now, is what is the one reason why you live in Mauritius?
Oh, it will be difficult to give you just one reason, but well, maybe on my part, it's a little bit different. I'm Mauritian. I like to say that I'm 100% Mauritian, and that's important to me. I was born and raised here. When I left Mauritius many years ago to go for my tertiary studies, I didn't want to come back because it's so small. Eventually, I did come back, and then I thought, why wouldn't you come back? Thinking of raising kids and being able to go to the beach safely every weekend, because the beach, anywhere you are on the island, is probably just a 40-minute drive away. I think the lifestyle is really exceptional. And of course, well, now I'm working, my kids are going to school and everything is good. The medical, well, I'm just going to go on and on, but everything is good. But I think really it's a lifestyle, and something that we get a lot as Mauritians is the smiles that you get around, even at the supermarket, in a shop, at the school, dropping your kids. Everyone is happy, and that's really important.
Yeah, no, great. Thanks a lot. I can testify to that. I've been to Mauritius. I've been fortunate for business and pleasure numerous times, and the Mauritian people are really friendly as well. Philippe, your one main reason why you've relocated there and stayed there for 34 years plus?
Well, the first reason is I met the love of my life. Frederique, my wife, she's Mauritian, so obviously there was no chance I would take her to Europe. I think the best move was to stay here because of everything it has to offer. And I've never been disappointed. Every time I go away on holiday around the globe, I just think Mauritius is the right place to call home. Good. And to raise a family.
Yeah, I'm going to really answer that from a South African point of view. Because I am South Africa, I can be critical of South Africa. The big thing here was the absence of violent crime. I was sort of helped out of South Africa with literally a gun put to my head. There's strict gun control rules here that don't exist. Petty crime is there. There's crime everywhere. But it's that absence of violent crime that's very attractive. From a South African point of view, it's the absence of exchange controls. You can bank in any currency you want to, which is very attractive. It's welcoming to non-citizens. We've mentioned a multicultural society, and it's home.
Yeah, exactly. It's home. It's a wonderful place to call home, for sure.
Yeah. Okay, I don't see any more questions from anybody. If somebody could just confirm that as well, I don't see
Nothing. Yeah, nothing further here.
Then I want to conclude the webinar for today. I know we're early, but the intention is not to try to make up time. The intention is to give you value, and value in time, I think, is worth everything to everybody as well. So yeah, thank you very much, Ian, for all your insights, Philippe, for all your experience and insights, and Valérie, from your side as well. Thanks for the JurisTax group for hosting this, Kesavan and your whole team, Kathy, everybody that's been instrumental in organizing this. Thank you very much. And I hope you will all have a great day and a great week, great rest of the year. And put Mauritius on your December holiday plans if you haven't done so yet. Thank you very much, everybody, and have a good day.
Thank you all.
Thank you, everybody.
Thank you for attending. Thank you, Guillaume.
Yeah. Thank you, everyone.